Good evening, all. Ira Epstein, and here we are with your SPDR ETF stock video update. And this update is for the evening of Tuesday, the 13th of December, 2022. We happen to be at 7 p.m. I had one of my best SPDR ETF morning subscriber videos today. My word was liquidate, liquidate, liquidate longs if you were getting up to the upper band. That does not mean I was telling clients to have gone through this report that are traders. But I have those that do, they'll write me, and I'm just a broken record. And the reason is when you hit a Bollinger Band for the first time and you're not embedded typically, that's where you want to take money off the table. I don't know if you watched what went on. You know, I pride myself in telling you when a major report comes out, recognize what the word major is and try not to go through it with new positions if you're a trader. Investors are going to have positions regardless. You know what investing is? Hey, that stock's real good today. Oh, it's not working out. I'll forget that I own it. I'll move on to another one because the company will come back. Isn't that what the life and time of an investor? Whereas a trader is saying to himself, oh, no, I've got to deploy my money. If this isn't working, I want to get out. Yeah, I don't care what it does a year from now. I care about what's happening right now, and this isn't working my way. I want to get out and use the money elsewhere. Big difference in the thinking. So when you put that thinking parts on, you got to know which cap you're reading. I have watched so many traders turn investors because they refuse to take losses. Okay. I'm not saying those companies may not come back. I'm not saying they will come back. There's plenty of failures that never come back. You've seen that. And this year, there's a big month that if you bought wrong, you're down 50%. You got years of waiting for them to come back. It isn't going to happen 1, 2, 3. I know you want to tell me it is. And if you're with Jeremy Siegel, who I saw today on CNBC, you're going to get a 15% return tomorrow, and that's conservative. And he gives all his reasons why, and the Fed doesn't know what they're doing, and inflation is really at zero. It's not at what we saw. Well, inflation, the way we look at it, came down today approximately 1/10 to 2/10 in both core and headline CPI. These are good numbers because they're going in the right direction. And very shortly now, you can start running moving averages and say, oh, you've got a peak. And if when you smooth it using moving averages, you have peaked out and you're coming down. I agree. I'm in the camp. What I'm not in the camp yet with is the Fed has to beat the labor market. It hasn't done that. We don't have it where the lag effect of the rise in interest rates has slowed that down. One sector slows, but the other, the service sector, is just super strong, and it's gobbling everything up. You know, eventually we're going to end the winter, and then we're going to get into spring, and what happens? Then the labor markets pick up again. Will housing pick up? It could. You know, if you get mortgage rates down near 5%, you probably got a good housing market coming on in the spring and summer. Traders will be looking at all that. So it's hard to know. Tomorrow we have the other shoe. We have a 2-step, 3-step, whatever you want to call it. Why? At 1 o'clock, we get the FOMC decision. So that comes out in writing. You'll have the dot plot too. Then we get at 1:30, Fed Chair Powell speaks. And he'll be on 45 minutes to an hour is the typical time. He's got a lot of questions coming at him, probably questions about labor, CPI peaked, what his thoughts are, where he's at. We then have to go overnight into what does Asia think, because they'll be sleeping 2:30 Chicago times, 3:30 Eastern time. You take that to Asia, figure that out. Then you're coming around the horn. I will be on TV in Australia at 4:30 in the afternoon tomorrow, which is about 9 in the morning or so where I'm at. I think that's around the time zone, talking about the markets because people wake up and they want to know. So that gets that part going. So you get your first reaction out of that part of the world. Then it moves over to Europe and then back to the U.S. on Thursday. I think that what this does is it absolutely gives you all the reasons to hope Santa Claus is coming to town because there's nothing here to stop that from happening. I like that part of it. But as I said, I think today was a wild one. So let's go to the markets and see what we've got. First off, there's a number of stocks that didn't do well. The automotives didn't do well at all. None of them. that I was looking at. Take a look at PSNY. Does that look to you like a market that looks good? I mean, here you have this big move today, and you can't even get out of harm's way. The market couldn't even get up to these key averages here. If it breaks through now this area, are we headed to the $5 level? Well, you could. I picked that number because it's the lower Bollinger Band. You'll be in that general zone. Momentum, you're oversold. Is it easy to get short down here? No. It either embeds or I'd be passing on doing anything in it. Then LIT, the lithium. Today, another stellar day, right? That's how the markets all started up. If you're watching your board or you're watching financial TV, start it up. You failed again right at the 18-day average. Market's screaming. It wants to go to 64.80. You'd have to take out today's high tomorrow or the day after in order to get a bear trap going in that market. Apple, I'm not a fan. All it did is get back on this whole rally to the 18-day average and not go anywhere. Just can't get out of its own way. Disney, I told you, I think you got to wait and see how Avatar does. Now, Chicago had the reviews today, and they gave it 3 stars, but said it's a heck of a movie, 3 hours long, and your jaw will drop because, as usual, Mr. Cameron just does things with the camera nobody else can do, and you'll be engulfed in it. But they didn't give it more than 3 stars. Is that enough to give it legs? That'll be the interesting thing. And I don't think Chicago critics are the best to begin with. But you just come in here, we'll see what that market does. But again, it ran into the resistance and it didn't do anything with it. XLF, market upon market that were down. They ran up to these numbers and they didn't go anywhere. Now, XLI did come alive, okay? So the industrial sector rallied. What do you do the first time you hit a Bollinger Band and you're not embedded? Take the darn course. Get rid of the name on the chart. Just get into the habit. That's what you do. That's what you don't do. You'll discover a whole new methodology that you're going to add to your arsenal of technical trade, and you'll write it down. This is what I have to do. Boom. Do you think you weren't wildly bullish at that number? I promise you the trade was. The pros like me, others, they're going, This is where you want to get your money out of your portfolio. You want to be able to dump stuff. Semiconductor. You went right to the Bollinger Band, you ran into the brick wall in it. XHB, the home builders. Well, the home builders have a lot to cheer. There's a lot riding on this. What if mortgages start marching down? The housing shortage has not gone away. So that's what they're hoping for. Do I know that it can do that good? I've got my doubts. I don't think you're going to break the long-term mortgage rate for a long time under 5%. I want it to happen, but I don't think it's going to for a long time. But there's your resistance. You're certainly not in a bear market. You're not down as bad as you were back here. Do you agree with that? I think so. Does it warrant getting long up here into a Bollinger Band? Never. There's not the circumstance. Energy sector, still bearish, but you're getting a bounce and you didn't get embedded. You're creating a correction. You could get all the way up to 88.94, the 18-day average, before you run into serious resistance. In the metal markets, you keep hitting the 200-day average in the upper Bollinger Band. You fall back from it and you're overbought. Okay, but if the dollar stays down, this is good. Do you buy a Bollinger Band? Never. You're waiting for your opportunity on breaks. Ideally, it'll embed if that's that good. Same in silver. You wanted to embed. You keep hitting the band and get thrown back. So the people that are buying over these bands, as soon as they're doing it, I know what goes on an hour, 2 hours later. They're in pain. Now what did I do to myself? How do I get out of this? Why did I buy it that high? On the correction, I should be buying it. I don't have the buying power because I committed the money to it. Copper. Same thing. You get up here to the upper band. Goodbye. Say hello to me. No, time to come out. You're not embedded. Today was a liquidation day, not a new buy day. Do you understand that? TLT, not much going on. You lost your embedded reading and you didn't even make a new high. You should make a new high if this is a super bullish report. You should negate the fact that you can't get down when you lose that to here. If you start coming down for these numbers, a little more interesting, isn't it, at that point in time? Because that's going to add. Real rates are then going back up. I'll let somebody else play that game. Dollar index. Today was a cover short day. You've been fighting a battle at the 200-day average down to that number. Today's the first day you hit it. I think the pros are not in this. Now, did we embed? Both numbers are under 20. I think you'd agree. Day before, they're under 20, but not the day before, or were they? They were. So now you got your fully embedded reading. It's the fourth day of it, fourth or fifth day. What are the pros going to do on a good rally into the market? They're going to sell it. They'll come out of the market when the red line's over 21. They'll want to sell it, and there's a way to do it. Take the course, and the number automatically is right there. I teach you where the number shows up in it. It is a moving average. And you should have taken today profit if you were in FXE, waiting to buy breaks. You have the embedded reading there. So you put this all together. You understand what you do. You may be good enough to jump off that train track as that's coming down, and you think you can beat the algorithm traders. That, by the way, they don't type anything. The algorithm looks at keywords, whatever's coming out, it acts. They have a faster speed line than you do to the exchanges. It's all automated, and you're trying to get your order in as a flood of orders come in that get priority over yours at the exchanges as well. I know you don't believe me on that. It is not the playing field you think. Why get involved in that? I'll never understand it, but people think, oh, there's that pop, I'm in it. Well, if you want that pop, you got to be there the day before, and you got to be right that you're going to get the pop. You do that. I wait for the reports to come out, and then I'll come back. I'm still got my gray hair. I'm still as old as I am. I'm still doing this. You know how many of my contemporaries can't because they don't have trading rules? You got to have the rules because you're always waiting for the loss. Did you hear what I just said? You're always waiting for the loss, and you got to be able to handle the loss so you can continue on. You have one asset, money. Yeah, I know you're smart. I know you got all the other things, but you have one asset that you can put into the market. It's money. You got to protect it as best as you can, and you got to understand you're going to have losing trades. You don't have to stand in front of a freight train to get run over, and then you're wondering, how do you get your funds back? So as I said, this was a day for the Bollinger Band people. They did great. How do you join them? Take a look at this and learn something. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.